So what I wanted to do is check, this is MicroStrategy. So I want to see what they have on their balance sheet. There's a lot of rumors about obviously the Bitcoin price, but also the MSTR price and their what is this? You basically force an account over here. Well, not in this browser. So this is falling a bit. What else? So I wanted to see, well, their business quality is bad of course, but the business survival is rock solid. But for how long is the question. Obviously they have, let's download the data first, but let me refresh. MicroStrategy latest quarterly report. AI please. Q1. So I'm up to date, my platform was up to date, but so I want to know how many cash they have. Let's see the cash flow statement. Yeah. So in the beginning of the quarter they had 2.3 billion cash. So I will download the AI dataset. And I will upload it in ChatGPT. Penke investing STRD, and we have the second variant 2026-06-04. That's now. So ChatGPT is reading the document. No, I want to know about the obligations they have for multiple products, and I want to know how much cash they need for it in what kind of time period. So what contractual cash obligations does Strategy have, and when does it need cash? Well, the uploaded financials only tell part of the story. The biggest obligations are not a tiny 31 of the balance sheet debt showdown in the March 26 report. The real obligations come from the preferred security Strategy has issued to the finance Bitcoin purchases. Yes. So traditional debt obligation from the March 2006 quarter, short-term debt was 31 million, long-term debt 8 billion, and cash and short-term investments 2 billion. The JSON does not contain the maturity schedule, and we cannot determine exactly how much come due to 2016-2027. So this is the important part, preferred stock obligations. Strategy has created several preferred securities like STRK, STRF, STRD and later STRC. These are economically similar to debt because investors expect dividends. So for the specific security STRD they have a 10% annual dividend rate, a quarterly payment date. In a perpetual security, dividends are non-cumulative and not mandatory unless declared by the board. So the June 2025 STRD offering alone raised through 980 million net proceeds. So at a 10% coupon that represents roughly 89 million per year of expected dividends payments if the board continues to pay them. So by 25-26 strategy had issued multiple preferred products. External reporting estimated the combined preferred stock structure could require roughly 300 million annually of dividend payments. So important also, they are not all legally mandatory in the same way bond coupons are. But failing to pay would likely hurt future capital raising ability and market confidence. Yeah, that's interesting. So it's not mandatory. So first question. So what kind of mandatory situation do they have? So based on your file, TTM revenue 123 million and free cash flow 26 million. The operating software business is nowhere near generating hundreds of millions of dollars annually to fund preferred dividends. That means strategy cash needs largely met through new security issuance, dus preferred converts equity, and capital market access, or potential Bitcoin monetization if needed. So liquidity runway. So the cash was 2.21 billion. But I've read they also did a buyback. So I have two questions already. So I've read they did some kind of buyback in the meantime. So Q2 2026. So they had 2.2 billion. Net debt is actually negative because cash exceeds reported debt at the operating company level. Yes, true. If preferred dividends were roughly 300 million, cash alone could... Okay, they have 7 years, but that is with the 2.1 billion for the dividends. So, yeah, let's put this in first. You are asking the right question. For a company like Strategy Inc., I would separate obligation into hard obligations, failure, legal consequences, and soft obligations. Hard obligations. These are the ones that really matter. So interest in convertible debts. So I'm not really, I'm just a programmer. I'm not at all an expert in these kind of, but what I can do is making a lot of questions and make it easy for you guys as well. There are the ones that really matter. Interest in convertible debts. Yeah. When a note matures, strategy must repay cash, refinance and convert into equity if conversion conditions are met. Oh yeah, operating expenses. In the soft obligations, dividends are expected, but they are generally not the same as bond coupons. The board can suspend dividends. This doesn't mean free money. If they stop paying, preferred prices collapse. Oh yeah, of course. They are now at $100, I believe. And future issuance becomes much harder. True, nobody believes them anymore. And their capital raising machine gets damaged. Also true. But it's not automatically a bankrupting event. That is good to know, because they still have the Bitcoin on their bankroll. How do you say it? Balance sheet. So about the Q2 2026 buyback, you mentioned the file you just uploaded at the March 2026 quarter and does not contain Q2 events. Sure. So I can Google that. Yes. Yes, please verify on the internet. Well, what kind of buyback they did. I believe they bought some convertible debt back. Please verify and explain it to me in a very simple way. That's all. Oh, I didn't check my sound actually. Okay, I hear myself. That's good. Well, that's not good, but the stream is working. So the problem I have is that maybe I should put my website on the other side, like this. Yeah, I think it's better. So you can actually read what's happening. Wait a moment. The status of the stream is okay. I'm live on Twitch and on YouTube's. So yeah, you remembered correctly. In May 2026, Strategy announced and then completed a repurchase of 1.5 billion face value of its zero convertible senior notes due to 2029. They paid approximately 1.38 billion in cash to retire those notes early. So 2 billion to 6.7 billion notes. Existing shareholders face dilution. So about half of the maturity will disappeared. Convertible debt still outstanding, 15 billion, 15.5, preferred stock outstanding, and 871 million cash reserve. So they reduced debt 1.5 billion. Yes. So 1.5 billion debt, and they paid 1.38. Hey, wait. I believe they had like a kind of discount. So I believe they got a discount because of the MNAV or something. I don't know. Just learning here. Yes. And this is actually one of the most interesting parts of the transaction. The simple version is Strategy bought back 1.5 billion of debt for only 1.38 billion. So I was correct. Saving about 120 million immediately. That's an 8% discount, yeah. So the next question is, why would bondholders accept less than 1.5 billion? So was it because of the MNAV? Yes, indirectly. And the 2029 notes were convertible notes. A convertible bond has two components: a bond, the right to get your money back, an option to convert into shares. Sure. That conversion option is valuable only if the stock trades sufficiently above the conversion price. Could be true. When Strategy MSTR traded at huge MNAV premiums, the conversion option was very valuable. Yeah. When MNAV collapsed and MSTR fell sharply from its highs, the conversion option became less valuable. The notes started behaving more like ordinary debt. Think of it like this. Imagine you own a bond, face value $100. Matures in 2029, interest 0%. Can be converted into shares if the stock does very well. So if the stock is booming, the bond is worth 120, 130. If the stock crashes, the conversion option becomes nearly worthless. So the bond might trade at 90, 95 instead. That's basically what happened. Why would holders sell? Several possible reasons. The conversion option was out of the money. So the stock price had fallen far enough that conversion was unlikely to be attractive. They got liquidated today. So instead of waiting until 2029, they received the cash immediately. Yeah, that makes sense. So they can do something with the cash. Many convertible holders are arbitrage funds. Oh yeah, of course. They are not long-term investors. They often buy the convertible, short the stock, and trade the volatility. So yeah, because the stock price plummeted. Where was it? It was over $500. So the bond was way more, and they shorted, of course, so they made a lot of money, and now they just get the money back from the convertible. Now I get it, yes. So when the trade majors are become unattractive, they are willing to exit at a discount if the economics make sense. Yeah. So why strategy like this deal? Well, suppose you own 1.5 billion due to 2029, you have to pay it back. Or you give 1.38 billion today, and we call it even. Yeah, that's 8% discount. So basically what it says, they have 1.5 billion less debt, they saved 120 million, they reduced financing risk and future dilution risk from conversion. Sure. So strategy presented it as strengthening their balance sheet. That is true, but they have less cash. So this is where it gets interesting, like ChatGPT says. It says strategy spent 1.38 billion of cash reserves to do it. So after the transaction, its USD reserve is now 871 million. So do they still have the money to pay the dividends, is the question. So they exchanged before more cash, more debt. After less cash, less debt, yeah. So what is the key takeaway? The transaction tells us something important. Strategy believed that retiring debt at 8% discount was better use of cash than buying more Bitcoin at that moment. Makes sense? That's notable because historically they always buy Bitcoin, of course. Perhaps the first time management effectively said reducing liabilities is currently attractive, yeah, 8% discount, I get that. This suggests they are paying much closer attention to the liability side of the balance sheet than many investors realize. Yeah, exactly. I think they are doing a pretty good job. Also, if you look at their MSTR tracker, so I'm really considering buying more of this stuff. No, it's mstrtracker.com. And what you can clearly, you can see here MNAV analysis, and also the sats per share. Dus that is the amount of Satoshi per share, and that is increasing. So basically, what it says, the underlying Bitcoin they held per share for the US shareholder is increasing. So, and that is, so you have basically two options. If you are interested in Bitcoin, for example, you can buy Bitcoin on the spot exchange, so you just buy a few Satoshis, or you can buy shares of MSTR, dus MicroStrategy, and then you get, or you don't get it, but the underlying value is this number, 220,000 Satoshis. So how many Bitcoin is that? Let's convert it. Satoshi to Bitcoin is like 1.0022 Bitcoin. So, and if you do this, Bitcoin to dollar in this case is 63,540 US dollar. Now I'm looking at the BTC price. No, sorry. I was looking at here, I mean. So the amount of Satoshi per share is $140. And if you are looking at the current price it's trading for is 126, 128 pre-market. So what does it tell me? It tells me that you can basically buy the underlying Bitcoin. You don't get the Bitcoin, but it's worse, the book value of the share. So you pay $128 and you get $140. And that's the MNAV. If you look at the MNAV, if it's like 1, you get the same. So it's like $128 is the share price. Then you also get $128 of underlying Bitcoin. But if the MNAV is going below 0, you can buy it cheaper. So that's why it's interesting. But we want to be sure they can pay their dividends for the other, because there is a lot of hype on Twitter X right now. Everybody is scared. Okay. So they have less cash now. And people are very worried, or showing they are worried, and they are talking a lot about fear of MicroStrategy. Wait, I can't type. MicroStrategy at the moment because Bitcoin is going down. Let's analyze this not based on emotions, but on the numbers. Because that's what we do. I always research it myself, and I don't. Well, I see them, a lot of people shouting around, but once you dive into the numbers, suddenly they're just wrong. But let's see. So I agree with your approach. Let's ignore the emotions and look at the balance sheet if we are a credit analyst. Yeah, that's what we do at Penke Investing. So what changed? Before the buyback, they had a cash reserve of 2.25 billion and a convertible debt of 8.2 billion. So they have an obligation to pay back 8.2 billion. Yeah, they cannot do that with the cash position alone. So they have to probably get more cash from someone else or sell some Bitcoin. But the 8.2 billion is not today. It's somewhere in the future they have to pay it. So after the buyback from the convertible debt, they have 871 million left on their cash reserve, and they have obligations in the future 6.7 billion. So the debt is reduced by 1.5 billion at an 8% discount. Yeah, we know that now. So more cash, we did that. So why are people worried now? The fear is not really about debt. The fear is about liquidity. Strategy itself disclosed that its US dollar reserve is now only 871 million. Yes. So, if Bitcoin enters a long bear market, how long can Strategy fund the dividends? Yes, exactly, that's what we want to know. And they have also continuing operations of the company itself. And do they make a profit? Let's see. Net income. No, they are losing 14 million. last quarter. So that's also interesting that they are a losing company. We have to keep that in mind. Okay, let's rank them. The mandatory payments. Tier 1, operating expenses. Well, they're losing money. Taxes and debt obligations. Very important. Tier 2, preferred dividends. They are not using bankruptcy triggering obligations, but strategy has built in an entire financing machine around the preferred securities. If they stop paying, future capital raising becomes harder, preferred prices fall, and so the preferred price is normally $100, but now it's trading at 94. Pre-market also 94. So obviously, if they stop paying, it's not 94, it's going to 0. And the investor confidence weakens totally. So then we have optional, tier 3, buying more Bitcoin. That's not mandatory, but okay. So this is the stress test. For example, if Bitcoin falls another 50%, assume Bitcoin falls sharply, MNEF compresses, so not sure what he's talking about. Compresses, so I think it's going down then, I guess. Equity issuance becomes more difficult, I don't know what that is. And preferred issuance become more expensive. Yeah. I don't understand this. Can you please explain in simple words? I get the point, they have fewer ways to raise new money to buy more Bitcoin. Yeah, I get that. So the machine works best when Bitcoin goes up. Yeah, obvious. And MSTR trades at a premium. So the MNEF is above 1. Sure. It becomes harder as Bitcoin goes down. MSTR trades near MNEF, but it's below MNEF right now. And investors are scary, and that's going on right now. So ignoring narrative in shouters on X, they still own a lot of BTC, Bitcoin. The average purchase price is 75,700. They still have almost 900 million in cash, and they reduce debt. That is not what a company on insolvency looks like. Exactly. They are not dying at all yet. Maybe never. Obviously, if Bitcoin goes to 0, that's not, yeah, then you have a problem. So, yeah, the cash dropped. The software business itself does not generate enough cash to support the entire capital structure. Exactly, we see they are losing money. There is approximately 6.7 of convertible debt outstanding and roughly 15.5 of preferred capital outstanding. Don't understand that. So the key number I would watch is not the Bitcoin price, not the revenue, not the earnings. I would watch USD reserve divided by annual cash obligations. Yes, that's what we are doing. Because that tells us how long strategy can operate without needing to issue new securities. So management itself highlighted the USD reserve as dedicated pool supporting dividends and debt obligations. So conclusion from ChatGPT, not me. So if Bitcoin falls 10-20% from here, no problem. If Bitcoin falls 50% and stays there for 2 years or more, The important question becomes whether Chesley can continue issuing preferreds and equity at acceptable terms. But the fear is right now, that is my point. I'm going to type that. But the fear is right now. Because Bitcoin is falling hard. So, what are the risks now and how long can strategy pay the dividends? So the recent debt buyback actually reduced one major risk, sure, but it also reduced cash buffer like we said already. So less leverage, that's good, but not liquid. But Bitcoin is liquid as well. They can sell Bitcoin. The next step is to estimate the actual annual cash obligations. Compare them. Yes, that's what we do. So, tick, tick, tick. Yes, let's do it. I love AI. Okay, we are going into easier words. That's for me. If you don't understand it, you can also type in the chat and I will just adjust. So MNAV compressors, what does it mean? So the Bitcoin's holdings are 100 billion and the market value is 180 billion. So the MNAV is trading at a premium. But we just saw it's not trading, it's trading below 1. It's on, what was it? 0.9? Yes, 0.91x. Going to type that directly. MNAV is trading at 0.019 at the moment. Now imagine fear enters the market. This is what we want to know. Bitcoin falls, investors become nervous. Instead of paying 1.1, they only pay, well, yeah, we pay 0.91. The premium is negative. I get it. Yeah, they can more buy more Bitcoin if the MNAV is above 0.1. I understand that, and that's good for the shareholders as well, as we can see here. That was here because the Satoshi per share is going up. That's good. Great deal. ChatGPT agrees. So it's basically typing in what we already discussed. Why does preferred issuance become expensive? Same idea. When investors are excited, strategy can issue preferred shares yielding maybe 8 to 10%. When investors are scared, investors demand 12, 15, 18% higher yields. That increases annual cash obligations. So that is the dividend payment, I guess. So investors are going to sell the STRC and then obviously the price goes down. That's what's happening now. Let's type it. So yeah, the STRC is now trading at 94. Okay, let's go on. The fear is not strategy is going bankrupt next month. The numbers don't support that, obviously, only if Bitcoin goes to zero maybe. What if Bitcoin enters another 2022 style bear market and stays weak for years? Using publicly known issuance sizes. So STRF, that is one of the products. That's another one, I guess. 2.1 billion outstanding, dividend 10%. So they need to pay 210 million per year. STRD. Wow, they are really creative with getting cash. Eh? So 1 billion outstanding, 10%, so that's 3.1 already. And then STRK is another 2 billion. So that's 5.1 billion. And 200, 300, 470 million per year. Exactly. Dividend is around 9 to 11%. I believe they did it higher already. So let's estimate. So that's 450. So I said 470. No wait, that's 900 per year. That's another one. S2SC. Yes. So they need to pay 900 million per year. And they only have 871 million. So I understand the fear right now. They cannot pay the full year. So they can pay dividends for 1 year, like I just mentioned. But now it comes, the important part. Does that mean they are in trouble? Not necessarily, because 1. Dividends aren't the only source of cash. They have software revenue, treasury management, and financing activity. But they are losing money. Okay, but this is a huge one, yeah, like he said. Preferred dividends can be suspended. Obviously the holders will hate it, but so they are not missing bond interest. It's getting ugly, so the shareholders don't like it, but they don't have to pay the dividends. That's interesting. And obviously they have a lot of Bitcoin left. So I think we should put in some numbers because he's so Bitcoin is trading around 60k now. Bitcoin is trading around 60k now, and some people think it's going below 20k. Let's dive into the most negative scenario. That's what we want to do as an investor, and that's well I do believe in Bitcoin until maybe later, but for now the network is secure, so I don't think we go to zero directly. But yeah, everything can happen. And obviously if we go to zero, well, this company is dead as well. But that is better of the investor. Everybody knows MicroStrategy is a leverage bet on Bitcoin. So yeah. So MNAV is 0.91. STRC is now trading at 94. Normally. Oh. normally $100. Yeah. Scenario. Now we are getting to the real question. Forget the daily price action. The most bearish thesis is not Bitcoin drops 10%. No, it's going down below 20k. First, what does 20k Bitcoin mean? Let's go by the numbers. Strategy currently holds 843,700 Bitcoin. At 20k, that's 60.9 Bitcoin. I already know they have less debt. They have less debt than 16.9 billion. That's interesting. So what the obligations remain? Convertible debt 6.7 billion in the upcoming years. I believe around 2028 maybe, 2029. Preferred stock outstanding, dus 15.5 notional. What was that again? Sorry, I'm just asking what I don't know. I'm not a wizard. Preferred stock outstanding, what is this again? In simple words. Yeah, and they have 860 million cash left. So at 20k Bitcoin, they have 16.9 billion on Bitcoin left. But if they want to sell that, they have a problem. Then the Bitcoin is going way lower. Yeah, and the convertible debt that they have to pay is 6.7. So that's not really a problem. Even at the ugliest scenario, the Bitcoin pile still exceeds the convertible debt. Yes, that is my conclusion as well. This is why a near-term bankruptcy thesis is actually harder to support than many people think. Yeah, that's what I saw. The fear what is in the market is totally not. You have to go back to the numbers and see what is really happening. But here's where the danger appears. Preferred structure. Recent reporting suggests SJRC alone is about 10.5 billion outstanding. Current dividend rate 11.5%. That implies they have to pay 1.2 billion annually, so every year. They don't have that in cash. And that's before adding to the other instruments they have. So some analysis estimate the total preferred dividend burden is around 1.2 billion. Don't understand that because he's saying it here before adding, and now it's still 1.2 billion. But some annual total preferred dividend is 1.2 billion. So this is why people are nervous. Look at the math. 871 million today, and they need to pay 1.2 billion every year. Yes, they cannot do it at the moment. So they have 8 to 9 months of preferred payments. But remember, they can lower the dividends. So why isn't everyone panicking? Because strategy plan is not use the reserve forever. The plan is replenish the reserve through new equity, preferred issuance and capital market activity. Yeah, that is true. They can obviously get more money from what they are doing all the time. But it's harder if the MNAV is below 0, below 1. So what happened if Bitcoin falls to 20k? premium disappears. Yes. Yeah. Preferred securities fall. So we are already seeing concern because STRC stays below the target level, its dividend rate can ratchet upwards. Recent reporting noted that a drop in STRC's price could increase the dividend rate on the entire 10.5 billion outstanding amount. So reserve starts shrinking. Instead of replenishing, the reserve dividends are paid. Reserve falls. This is the key moment. What would seller do or seller do? Stop buying Bitcoin, easy no pain, or issue less preferred stock, slow growth still manageable. Which ooh, wait a moment, the big helicopter coming in. Sorry. That was a search and rescue helicopter that was landing here on the hospital. And we normally only have the normal helicopters. This is what big helicopter. But okay, where were we? Yeah, dus what was the scenario? If we go to 20k Bitcoin, what would Sailor do? He can stop buying Bitcoin, sure. Issue more preferred stock. Suspend some preferred dividends, like I said. That hurts credibility, but it preserves cash, sure. Many of these preferred structures are far more flexible than traditional bond interests. Yeah. Saylor talked about that. They have a lot of options indeed. And obviously they can also sell Bitcoin. And I think if you are looking at you as an investor of MicroStrategy, well, do you care if they sell Bitcoin? Well, in my points, they have to sell it on good moments. So if MNAV is trading below 1, they can sell Bitcoin and buy their stock back. That means they basically get a discount. The only problem is, obviously, how will the Bitcoin price react? Because Saylor sold 32 Bitcoin. And I think that was a test. Because the MNAV is below 1, they are thinking about selling a little bit of Bitcoin and buying the stock back. So this number, the MNAV, the cents per diluted share, is going up. And that's perfectly fine for me. And how much is it going up? Well, if they sell Bitcoin now and they buy stock back, that means there are less shares, outstanding shares. So the remaining Bitcoin divided by outstanding shares is the new Satoshi's per diluted share. And that's good news for the current holder. So I don't mind if they sell Bitcoin at all. But they have to do it quietly, not too many Bitcoin at once. That's the instrument. So if Bitcoin goes up, that sounds a bit strange, but if Bitcoin goes up, the NF and the premium goes above 1, well, they can raise more money and buy Bitcoin for it. And if MNAV is below 1, they can just sell the Bitcoin and buy the stock back. That's good for the holder of the company. So I'm not that worried yet. Yeah, bankruptcy is just shouting bears. So at 20k Bitcoin, they have still 16.9 Bitcoin and a debt of 6.7 Bitcoin there. The company would be under enormous stress, sure. My max fear scenario, not mine, but on ChatGPT. Yeah? So Bitcoin falls to 20k, it stays there for 3 years, MSTR trades at or below MNAV, they don't have cash left, they suspend their dividends, I think everybody understands that. Now is the question, do we believe Bitcoin stays at 20k for 3 years? Or we are not even there, we are at 60k. And obviously the financing engine is breaking at that point, but that is based on Bitcoin. So the biggest risk today is not that strategy runs out of Bitcoin. The biggest risk is that it loses access to the cheap capital before Bitcoin recovers. Yeah. I wanna know that. So if you like this kind of investing stuff, you can always follow me on Twitch or YouTube, or subscribing on YouTube and following on Twitch. You can also ask me questions. What kind of stock are you interested in? We can look at that together. I'm not a wizard, I'm just a programmer that is interested in numbers. So I made this site, and because I want to investigate myself into the raw numbers, and I hear a lot of noise in the space, and I don't like it because it's always negative, but the numbers are not that negative as we just saw. So this is the single most important thing to understand, and what I also do is, by the way, I just ask questions in simple words a lot, because I'm not an accountant. I'm just learning it myself, so I'm just reading it out and I'm learning it. That's actually that simple. So let's ignore all the financing terminology. Imagine strategy owns a giant apartment building. The apartment building is the Bitcoin. Let's say building value is 50 billion. Now strategy needs money. It has several choices. Borrow from a bank. This is debt. The bank says, here's 1 billion, pay me back later. That's convertible debt. Okay. Sell ownership. This is common stock. The company says, give me 1 billion and you own a small piece of the building. Oh, it's raining very hard. So sell ownership, sure. That's what they're doing. They give me 1 billion and you own a small piece of the building. So issuing shares, so that dilutes the current shareholder. So for example, and this is flat out, but you now own every share has 220, well, or basic share, I'm not sure about that, but let's assume it's 220,429 Satoshi for each share. If Sailor says, hey, we are going to double the outstanding shares, so we are going to the market, hey, you can buy it, then it's suddenly this number divided by 2. And that's obviously not good for the current shareholder. So back to, where were we? Yeah, that's dilutions, as we just explained. Preferred stock. This is the middle ground. The company says, give me $100. You don't own much voting power, so no, you are not a shareholder. But we will try to pay you about $10 a year, so 10% dividend. Yeah. So you don't have rights. So this is, I understand why they did it. It's really flexible. So what does the 15.5 billion preferred outstanding mean? It means investors have given strategy roughly 15.5 billion in cash from the preferred shares. So in return, it's expected to make regular dividend payments, sure. Yeah. Get that. Difference from that, pay me or you are in default. Yeah, and you are very angry if they don't pay the dividends. So why is everybody watching STRC at $94? Because it's supposed to be around $100. And maybe, imagine if preferred pays $11.50 annually at $100 price. Is 11.5 yield? Yes. But if it falls, it's way more yield, obviously. So they're demanding more compensation. That's a warning signal. If the market is saying we are becoming less comfortable, not panic, just a higher risk. The real important thing, a lot of people look at strategy and think they have 6.7 billion debt. That's not the whole picture. The bigger question is, can strategy continue supporting 15.5 billion preferred structure? Yeah, good point. So one more question, maybe? So what happens if... so what is the price of... Oh. So at what Bitcoin price they are in trouble? The surprising answer is there is no single Bitcoin price where strategy instantly gets in trouble. The danger comes from a combination of Bitcoin price plus time plus access to capital markets. Sure. Yeah, so STRC is where strategy gets a lot of funding. When STRC trades below par, they can get less cash. So below 10k it's becoming problematic. So maybe another question. So what about buying? So when is a good buying opportunity for MSTR and or STRC? This is where I would separate MSTR and STRC because they are very different investments. If you are buying MSTR, the question is not what Bitcoin price is good to buy. Yeah, at what premium am I buying Bitcoin? So if NF is 0.91, you are effectively buying strategy for less than the value of its Bitcoin and other net assets. Yes, that's very different from the periods when investors paid 2 or 3 times NF. Historically, the biggest risk with MSTR was overpaying for the premium. Today, the risk is more Bitcoin keeps falling, the financing machine weakens. market assigns little or no premium, but MNAV truly says below 1, you're not paying a huge premium anymore. So potentially very attractive if you believe Bitcoin survives. If you are buying STRC, this is a different game. STRC is closer to a high yield income security. Current concerns trading about 94 instead of 100. Yield has risen because price has fallen. Investors are questioning the sustainability of the financial model. So several analysts looking at the structure have suggested that an 85 to 90 range would likely correspond to a several stress event where the market is pricing in meaningful financing risk. The most bearish realistic scenario So if I was thinking purely in probabilities, MSTR becomes increasingly attractive the farther below MNAV it trades, assuming you believe Bitcoin eventually recovers. Exactly. And I think that the MNAV is going higher than the premium, than 1. And then you sell MSTR again. The key distinction is buy MSTR if your thesis is Bitcoin eventually wins. I think so. Buy STRC if your thesis really survives and keeps paying most of its dividends. Well, and on the short term, next few weeks to few months is actually much harder than the long term. Yeah, so let's watch STRC in the upcoming days and weeks. If it goes back to 200, its fear was overdone. So if ChatGPT were trying to buy, I generally wouldn't try to catch the exact bottom. So it would ladder in. I'm already doing that for MSTR. And for STRC, you are getting paid to wait. That's a nice sentence. You are getting paid to wait. I need water. The risk is that the market knows something you don't. So the fact that Strategy spent 8.38 billion of cash, not so bearish. I don't see evidence, so we are looking at the numbers. We don't see any evidence for that from the figures we discussed. The short-term risk looks more like market confidence and funding costs than immediate inability to pay obligations. That's it for now. So, if you want more live sessions of this, follow me on Twitch and/or subscribe on my YouTube channel to get a notification. Thank you for watching. Bye bye.